Alright, sweet. Yeah, okay. I'll get proper started here now. I was going to run through a bit of a basic top-down analysis again from the daily. I don't know if I'll redo everything. I kind of could, doesn't really matter. Maybe just all this, and then I can explain, and we can go over. Yeah, so we'll sort of start from back here. I was going over my breaks of structure and how I see them. And we have like this push down here, and then we had sort of, okay, it's not a liquidity sweep, but we took out the highs from this last high, and then we ended up breaking a new low, giving a break of structure. Then we've got these consolidations here that we ended up taking the liquidity, and then we broke with a body break, new structure, ended up, taking some highs out here and then pushing down, new break of structure. And then we got our, daily high being broken, our confirmed like major CHOCH level on the daily to, thinking, okay, this is like, sort of reversal, like confirmation of a daily reversal point. And then we had this small miniature pullback, which happens when we get pretty impulsive. Nice break of structure again here. So why it didn't happen, like these weren't daily breaks of structure for me. All the lows were getting held. So this minor pullback on the daily was held, minor pullback on the daily held, pullback held, and we just kept pushing up until we finally got this pushback, and it took out some of these little consolidation lows into like intermediate lows. And then the same thing happens here. We get this new break of structure. So then after we get the break of structure, this is our new daily low. We get like these intermediate consolidations that make like sort of internal pullbacks. But again, they didn't take any lows. We didn't sweep any daily like intermediate pullbacks. And same thing again, we put in another little low here, but we didn't sweep the last low, and we kept pushing up. And then finally, so that's why the daily low stays here, because these aren't considered really pullbacks. Well, actually not considered retracements on the daily. So they're just considered sort of minor pullbacks, which, we're looking at relative to the time frame. So obviously on the 4 hour, if you go on the 4 hour, there may be a different story in here, but we're looking relative to this time frame we're on. And this didn't sweep any liquidity from the daily pullbacks or anything. Neither did this one, just a minor pullback to push forward. Once we started taking liquidity was this move down. And as you can see, this is what we class as a nice retracement. We've taken liquidity from the last leg. We've ended up holding the low. And this would, once we started having the retracement back to take liquidity, that's when we can confirm this is a daily high. Before even we hold and break it again, as soon as this starts to get a pullback and take some of this liquidity from this leg, that's our daily high confirmed. And that's our next area to break. And so you can see here, that was our next area to break. You can see it again here. We have intermittent lows that, would confuse people that, okay, this is the new break of structure on the daily. However, we have to think this is our last low and this is our last high on the daily. So relative to this time frame, these are just minor pullbacks and not the external structure. And so we have to think, okay, these may be different on the 4 hour, but we always have to look relative to this time frame. And you can really tell this, what I've noticed as well, to try to build some actual hard rules about it, is you can tell this by, did this retracement or pullback take any lows from the last, area? And if not, and it just keeps moving up, the lows just keep getting held. So we're not in a daily retracement at all. Until, okay, we did break structure there, which is nice. And we finally, this last sort of push up to the high where we got a little bit of a low. And that's when you can sort of see we've swept these lows that led to this high. And you can sort of see that, potentially this is the start of our daily pullback. And we're going to start cleaning up some of this liquidity that was, left behind by this, sort of perfectly trending market. And then the same thing happens again. We broke this structure. So this is the new confirmed daily low down here. As we started taking liquidity from here, we can confirm that this was the new daily high. And this was our new daily range that we were in once we started this price action going forward. And we can know that this is our daily range due to the, this is our low before, this is where the break of structure. you know, we only started cleaning up some of these lows. There was no liquidity sweeps on the way down to show us maybe reversal patterns before the break. It was just a continuation of the movement. And then we've got our daily retracement. Within this, there's probably 4-hour market structure, but we always look relative to our time frame. And so we were starting to pull back on the daily, expecting the low to hold because we're in a daily uptrend. And, you know, we have our reversal pattern, and this is our next high to break. And that's the same thing over again. We now broke this high, and that was our current low. And even with this, we did take out some lows, but we never got a confirmation of the reversal pattern on the daily. So if this had have swept here, and then we got our nice breaker structure for a reversal pattern, then we could have been starting to look at ourselves. You know, this can be, okay, we might be reversing from these highs and the daily trend's going to switch here. But at the fact that we just got, you know, wick lows here, we never got any closes below on the daily, means like that there was never a confirmation of a reversal pattern on the daily for us to be switching to bearish. It was potentially on the 4-hour, we had a short-term pullback, but on the daily, we never had any solid confirmation in terms of body breaks to show us that this was actually going to be a major daily reversal point. And so then obviously after we had these, you know, wick buybacks, we then got our sign of strength in the middle here, and we ended up breaking our. So you can use the intermittent structure on the daily to, you know, get some idea of, you know, is this signs of weakness or strength? You know, if we had a big daily bearish candle here that closed below this line, then we could have been cautious that, okay, maybe, you know, this was the high and this is reversing here. But just the wick breaks are really signs of market being bought up, ready to go, sort of accumulation here on the daily. So that's why it's really, you know, really good to focus on your main structure until it gives you some sort of like significant indication that, you know, we're reversing, you know, like especially when we're uptrend, we want something really significant in a bearish, you know, that we may be reversing. So even though now we've had this big push down, we still know that this is our daily low. That's the potential to hold. It doesn't have to, but, you know, we trade with, that's how we can follow the trend. You know, if we had a thought we're going to lose the low, we could have missed, you know, we could have been confused here and moved up. You know, here we've moved up. You know, maybe this is the time it breaks. We don't know. But until then, we have to, you know, trade what the chart shows us, and, you know, potentially the price may respect this low. So pretty much where we are right now is in this last daily point of interest or demand or whatever you want to call it. We've got a few wick lows here, you know, so I have sort of a theory that if we were to go bullish, we might end up with like some sort of dump or wick down into these areas, even as low as that, to just like fill some of this demand space that was left behind. And then we might see a bit of a push up here. But I don't like to predict the market too much. But yeah, that's sort of potentially what I may see, unless we see some sort of actual demand come into the market inside this area. Because right now it's questionable, whatever's going on. So what we've been trading as well, I can mark it up as a little bit as well, is sort of this like, you know, because these daily areas get so big with their, you know, these external structures, sometimes it can help to mark up, you know, what's happening internally more locally. If it does get too confusing on like to have that on a daily as well, then just drop down the 4-hour, focus on those local trends. But, you know, I'll show you here. It's sort of what you want to look for is like, you look at these wick highs, you know, places that like have swept areas of a few wick highs and stuff. And usually they're quite interesting points of the market that are pushed down. And like you'll see here, just for an example, you know, these, I'll zoom in a bit. This is a really big push up that swept. you know, and then push down. You know, it probably looks better on the 4 hour, but just to give you an example on the daily, and we got this like single candle push up and then, you know, body break here. And so then you've got sort of this area here, which then you can kind of see the next sort of same pattern that occurs. They're quite easy to spot on the daily because they leave huge footprints, I guess what you say, or fingerprints in the market, because you've got all these wick highs and, you know, we've had a big sweep of them. And what did that lead to again? Another, you know, this low that led to the sweep high then was broken. And so we had this sort of big area here. It didn't quite reach it. Not this deep area, didn't quite reach up to it, but nevertheless, sort of the same sort of pattern. This big push out with these wicks, taking out this wick high here, taking this high as well. So all these, and then, you know, this low that pushed up to it, eventually broken as well. So we've worked our way down internally. You know, maybe at first, like your first glance, it kind of looks not so nice, but just look for these key areas. You know, look, okay, how high did this wick go? Where did it take? And then where did that wick lead to? Did it break some lows here? And then where did another big wick lead to? Did it break some lows? And you can sort of see the flow of the market, you know, down, push up, down, push up, down, push up, down. And that's just like, you know, everyone, you know, that's how markets move, whether it's up, you know, in a basic form, it does that. But, you know, obviously with the candlestick patterns, it does a lot more in between. But, you know, you can see it much more clearly on the daily. So it's really good to identify it there. And then you can sort of see the footprints of where the big guys push the market up, took out these highs, and then, you know, sent it in its direction that they wanted it to go. There's like the difference between minor CHOCHS and major CHOCHS, you know. So if we're talking even on this internal structure, you know, this high here, well, you know, this high here, well, I'll come down to recent price action. So this high here would be where I would at the moment consider like a major daily CHOCH level. Like this is where the market, if we're talking internal right now, is going to have to, for me, push up right now, unless we put in more structure or whatever happens. But at this moment, for me to be like a full change of direction on the daily internally would have to break above this level. Okay, potentially if we break above this small consolidation here, we can see that as like sort of a minor sign of strength, but it also can just be a signify that the market is just having its retracement and ready to reject from this area and come down. Okay, so that's sort of what we consider a minor CHOCH. You know, you can see it here. We've got these consolidations here as well. And with this consolidation, we did have, you know, a break above it. However, like I explained before, to have a solid retracement, whether it's internal or external, we need to clean up liquidity that was left behind. And before we had this push up, you know, before we had to push up to take what I like explained over here, there was these highs were left, you know, there was these highs left, you know, and we were just pushing down in a nice like trending motion. And for the retracement to happen, for market to keep moving in that direction, it has to take liquidity from somewhere. So it has to take out some of these highs. Whether it takes out just one or both of the highs, we never know that exactly, but it has to pick up, you know, orders. If we want to keep moving down, it needs to be able to fill, you know, their large orders from somewhere. And they do it by manufacturing, people thinking, you know, okay, we push the market up, we'll break some areas, we'll take out these stop losses, and then we'll, you know, make people think that we're going long, you know, that are too focused on the small time frames or anything like that. And then we'll, you know, we'll push it up into our area that we want to then sell it back down. Okay, so we can't get too excited. That's why it's really key to know these major areas that need to be broken, because we don't, even if this breaks and we push above it, you know, it can be a sign of strength. And eventually when we do reverse, that's the thing, that's the problem. Eventually when we do reverse, we're going to break this level and then eventually break this level. You know, so that's a sort of hard thing to, you know, eventually it will happen that this first choch will end up being the first sign of going to the next choch, because that's just how, you know, markets have to move, they have to break. But for me, until we break this high right here, you know, I'm still happy to short the market down from this area. And it's the same like this, until we break this external low here, I'm still happy to look for longs out of this area. So it's sort of understanding where you are sitting in the market in between like demand areas and supply areas. I think Choch is a very tricky thing to teach and learn, because there's so many different interpretations of it. And I think a good way that we would like to break it up is like these sort of major Choch levels versus minor Choch levels. And so when you actually know this time frame is you know, showing big signs of reversals, you know, instead of maybe just showing taking out this leftover liquidity here to then continue the market down. It would be the same as this last leg had a pulled back and smashed through this high. Before any of this happened, you know, that would have been very bullish, breaking this high. But instead, all we did was clean up some, you know, leftover liquidity here, leftover liquidity here, and then the market kept moving. And that's why I didn't get too excited when we're up here. You know, this was still the area I had marked out the whole time, being like, if we reach this, I'm still looking for shorts. And that's like the main reason, because we have to break these consolidations if market wants to keep moving in a direction. So we're always going to get these minor chocks. It's just knowing the significance of them. That is the importance, and knowing where the major significance is. And so this goes in all time frames. So I'll jump down to the 4 hour, and so we can sort of look at it on like on the whole time frame sort of thing. But in terms of the daily, you know, this is internal structure. This is a place to break, really, to really show like we're in daily uptrend, and then daily sign of strength, like a big sign of strength out of here. But right now we're sort of stuck between this daily demand and this daily supply, essentially. Or even this one as well. We'll explain it. I'll go over deeper. We'll go on the 4 hour and do the exact same thing. So that we can sort of clarify. So yeah, we still got this daily supply here. But in my mind, I know we can reject from here. We even had this tiny one as well. So you can almost even consider what we could say is, you know, maybe, you know, it's a pretty weak sort of consolidation, but, you know, technical terms on Choch, you're sort of breaking, you know, this consolidation on the daily. You could say this is like kind of a minor Choch, you know, which like from what I'm trying to explain here, you know, it means there's sort of potential. It definitely looks better on the 4 hour. That's why, like, you know, if you're sort of trying to force it on this time frame, move down a time frame, and then you can look at the significance. But just for example here, okay, let's say we just consider this a Choch. This Choch is a lot different. It's still a change of character. We were just making, you know, daily supplies, daily supply, daily supply, and then we broke above the supply. But, you know, this could just mean that we're starting the pullback to reject, to move down again like we did here. You know, we pulled up, broke the supply, and then moved down again. So we have to weigh up the significance of this Choch. Breaking this consolidation versus breaking this consolidation is very different in terms of Chochs. Okay, this is okay, a little bit of sign of strength. Let's mark out our demand areas for possibly go longs. This is like, okay, this is like a huge sign of strength. We're probably not going to be looking so much for shorts anymore. You know, we're back bullish mode. You know, focuses on taking longs as much as possible. Whereas here, okay, we'll look to, you know, buy out of demand, but we're also going to look to short out of supply, because that's, you know, the structure that's showing us right now until we break this high. So just to clear that up. So we'll just look at like recent PA, so I'm not doing it forever, you know, which is the main thing. Once you get on the 4 hour, you sort of want to look at most recent, because, you know, that's what is going to be most relevant for you. Once you have your big daily range, you can sort of see with your daily points of interest where you are. You look at the most recent, maybe you have to go back a couple of weeks or something to really, you know, get where you are. but then you're like trying to look for significant lows and highs and, you know, see when the last body breaks were. So I can, you know, even just on my screen like this, you know, I go back to the top here. I guess you could see here, this was a low and this was a break here. So I'll line that up just in terms of what's on my screen right now, because if we've got the daily already marked out in all those areas, you know, we know this high time frame bias. Now we want to get more local and see where we are. So we look, you know, if we just have it on our screen, we've got a 4-hour breaker structure here with a body break. We then push down to this wick here. Now I don't trade wick breaks. So for me, this is just a failed run of the lows. And so there wasn't any body break. So I wouldn't actually like trade any, you know, shorts so much from here, or I would do them really like short term, you know, sort of scalps or stuff like that. But like in terms of market structure, we've got wicks, you know, another wick break. And so with my wick breaks, I think everyone, well, most people know by now, I moved down my low. So this was the low before. As soon as we break it with a wick, this is the new low that needs to be broken. Broke it with another wick, this is the new low that needs to be broken. And we ended up breaking it over here with a body break. After we did have, you know, you can sort of read the market. We failed the lows. You sort of read it, the market. Okay, we failed the lows twice. Shows a bit of sign of strength. Doesn't always show like exactly, but you know, it shows a little bit of weakness in these highs. At least the local high here, you know, because if this wasn't able to push us down and break with body break, then, you know, maybe the market is saying we need to go back up and collect more liquidity, sweep out a few more people before we're ready to go down. And it's sort of what we did. We first took out these highs and then we held the low again. And then we ended up just taking out all the highs here. So you can sort of, that's why I don't really trade wick breaks, because I would like to trade with strength in the market. And, you know, wick breaks show, you know, buying pressure in a downtrend. And sort of weakness in these lows means like someone with not enough money has tried to push the market down, you know, whereas like the people with the big money, you know, they'll make sure the market goes in the direction they want. And sort of that can be justified, I guess, with my back testing, at least by these body breaks and confirmation of breaking these lows. We then had this bit of consolidation here, which, you know, I consider it's what I talk about these, you know, it would have, how we move the market would have pushed up here and then we would have pushed down. So we've got, you know, a nice little liquidity sweep. You know, for people, it's hard to fathom that this, you know, this could be a whole leg. But then this could be just a minor pullback. But for me, if we take some liquidity, all that means is, you know, we've collected some, you know, data retracement, whether it's big or small. Obviously they more do come to the 50% line or, you know, come higher, but they don't have to. There's no like set amount to pullback can come. And that's why I sort of try to develop this theory around the liquidity type of movement, because it's what fuels the price action, what fuels the market. You know, 50% retracements don't fuel the market. You know, they're just off people's, you know, average of finding, you know, with fib retracements or something like that. You know, it's a nice number to, you know, be able to teach people clearly, but liquidity is what fuels the market. So as long as we're cleaning up, you know, some highs, then for me, the price can keep moving down. And it does. We move down, and I'll show you here what I mean as well. We then get our new, let me mark it out. Our break of structure with our new high, because that was the low point. We then push, this is our high point. In the middle, we've put this, you know, little pullback here. But like I explained before, that we got another pullback here that put in some highs. Didn't take out these highs. You know, this put in some highs. This pullback also, you start to see the picture. We got a little pullback here. Didn't take any of these highs out. Didn't take any of these highs out. So for me, the low just kept moving down. You know, so this was our final low here that we would have put in, because all we've done is left highs that, you know, sitting there, not being swept yet, highs there. And then, okay, we finally get the price to pull back. You know, what someone would call, okay, we have a minor choc. But for me, I know the significance of this is it's just the beginning of, or potentially the showing me the start of a 4-hour pullback, because we've just taken liquidity from the last consolidation, which shows a bit of sign of strength, but also just as a healthy market beginning its 4-hour retracement. We ended up taking out these highs as well. And, you know, and then we continued down with a wick break here. So a little bit of sign of weakness. However, we didn't have much of a consolidation, didn't push up very high. We just had a small consolidation, leaving some highs here till we eventually broke the low. And then we had our new 4-hour high, our 4-hour break of structure that originated from this point, because this is a low that put in the high, that took the liquidity from the last leg that pushed down, confirming the retracement. Okay, we had a wick break, which means I move my, I move my low down to this wick. This needs to be the next break. So that was where the confirmed 4-hour point was, but the highest point between the last low is here. And so we had these consolidation here, which, surprise, surprise, this market pushed up, took the liquidity from this consolidation, confirming a 4-hour retracement, then leading to the next break of structure. Okay, so this is sort of the theory that I developed around, market needing to clear up these liquidities before it can move low. And, I can explain why that's my external pullback, and why I'm still waiting for a retracement to, clean up liquidity to either move it in the next direction. And why, these sorts of areas, if we close above them, are still minor chocks for me. And I'm waiting for these highs to be broken to be major chocks. However, then we had our wick here. So then we had, what we got here was our 4-hour high finally got broken. So for me, this is actually a decent, that would be like a 4-hour choc, like we said, which shows strength in the market. And this is where then what we think about is when a 4-hour choc happens, like a major choc, where we break a 4-hour major choc. This is a sign actually of starting a daily pullback. If you can put that all together. So I can sort of show you right now, it's fair enough. Once we have that, we definitely would be looking for areas of strength. However, there's also the potential that this 4-hour choc, and this is where the multi-time frame analysis sort of goes into one another. It is quite simple, but just to grasp, let me just, I'll make it, you'll sort of see what I mean. So we got our 4-hour choc. Let me have a look. Which was the start, like I showed you before, this 4-hour choc was actually the start of our daily retracement. And so sort of that's how it goes, fractal into each other. When you get a major 15-minute choc, I would say that's can be the start of the 4-hour retracement. Then you get a major 4-hour choc, can be the start of the, in these sorts of moves, the daily retracement, and then it moves up time frame by time frame. So you sort of can see, okay, we've got a 4-hour choc. Longs are valid. However, we have to come back to our, daily time frame, that there's a potential that, we still have these areas on the daily that we can reject from. So we have to be aware that, longs are valid. Once we get into, you sort of find this nice, on this internal. Once we get into our daily discount zone, if we're in a daily downtrend with a 4-hour choc looking up, we still get in potential that, if we do get reverse choc down in these areas, we could go short. So it sort of goes into one another in that sort of sense. And that's why I sort of want to explain, because a lot of the time even myself, when I first started, you know, we get this 4-hour CHOCH, and I'm thinking, and you know, I used to be like, yep, okay, yep, we're bullish now. We're okay. This is everything's longs from here, and then you know this happens, and we start bleeding back out. And it's because, like, in the scheme of things, this is just the start of like a daily retracement, and then you know if the daily pushes back into its discount area or its like daily point of interest, which we didn't quite reach here, so it's a bit tricky. Then you know that can be what then moves the market, and it's because each time frame has to have its retracement. So it's probably a little bit it's a lot to learn and to understand, but you know it's good to see how all these time frames move into each other, and it can explain to you a bit better why you know we ended up just rejecting and you know dumping so hard. It was because this market was respecting the daily downtrend that we're still in. You know, we did get our 4-hour CHOCH, and you know ideally it would have been nice if you know it pulled back and we could have like traded it up into this daily discount area, but it was super impulsive and just ended up you know taking out, like I showed you on the daily, these where is it? Yeah, ended up just taking out you know these daily consolidation highs, and then completing its daily pullback and heading down. There's no way we can officially predict. That's why we have these secondary confirmations of, okay, we've got our 4-hour CHOCH. Let's have a look. We mark out our areas in these areas of, okay, we're in a 4-hour CHOCH. We'll mark out our areas, you know, and, you know, look for these 15-minute reversal patterns to see if we can like keep moving up from there. Otherwise, you know, pretty much almost instantaneously, yeah, it's pretty bearish coming back in, but it was still valid. This was CHOCH. This was just a, you know, immediate structure, you know, so, you know, you can consider this like a, I guess, a minor CHOCH in terms of what I'm trying to teach here. You know, for us to be really confirmed that we're back bearish on the 4-hour would be, you know, breaking this low down here. But we would have had, you know, as we were aware in here, you know, you've got on the 15 minutes and a sweep and then a 15-minute CHOCH that began here. So there was potentials to like get shorts from here into these long areas to then see if we're bullish. If not, you know, we try the next long area and then, okay, we're back into our 4-hour downtrend. This is just a daily retracement. So trying to make it as clear as possible and just like understand the significance of understanding, like having that daily is, I use it for like, yeah, we can see where we are in the market, you know, have these areas marked out that are sort of significant on the daily because they are much more significant than the 4-hour. You don't take trades from them, but when we're coming into these areas, they're good to be aware of. And then you come down and you look at, you know, how is structure reacting from these areas on the 4-hour, you know, and then on the 15 minutes, how is a 15-minute reacting from the 4-hour? And so it gets less significant each time you go down. But obviously we're taking trades from the 15. So we need to have these sort of 3 levels of analysis in place so then we can see the full picture of, you know, what the market's doing. So yeah, you can call this a 4-hour CHOCH, whatever you want to call it. Sometimes I just call it another breaking structure because, you know, it was a change of character, but we never got a confirmed 4-hour bullish order flow, which would be like putting in a high, coming back and breaking structure again. So we sort of just got essentially, well, a daily pullback, but a 4-hour CHOCH and then a continuation of the 4-hour trend. But yeah, whatever makes you feel like you understand or makes sense to you, you can call whatever this, you know, especially if you get CHOCH, you know, call it whatever you want to, that makes sense. And so then essentially we've had since then quite a massive 4-hour range. 4-hour high. And you sort of see the same highs here. Well, your low that led to your choch then got broken. So it's a failure of your choch, continuation of the 4-hour trend. 4-hour breaker structure. And so here we had just minor pullbacks. This didn't take any liquidity from here. This didn't take any liquidity from the high. Another minor pullback, which, you look at these minor pullbacks, but they're going to be significant on the 15-minute time frame. There probably would have been, 15-minute structure in here. But, when we're doing our top-down analysis, we want to look what was significant to this time frame. And for me, I can tell that, eventually we need to have a pullback, retracement here, because we've got, liquidity line above here, liquidity line above here. We had liquidity line above here. And now we had our pullback to take out some highs. We can confirm that this is the legs low, a 4-hour low now. It's confirmed because we've actually had, a retracement that's taken out some of the main structure highs. So we can say this is confirmed, wherever it is, 4-hour low. And this is what we I just explained too, would be our minor choch, which is fair enough to, look for strength now. We've got a minor choch. But the significance of this is just identifying that we're either in, completed, or starting our 4-hour retracement. And our major choch level to flip the 4-hour is still all the way up at the 4-hour high. So we're still going to be looking at, I don't know, something like this. So just areas, that 4-hour area, this 4-hour area, and even, I'll just mark the whole area. It's 4-hour areas, so it's not, you don't have to be super precise with it. It's still going to be looking for, areas of 15-minute choch and rejection to continue this trend down in these sorts of areas, because we know that this is just a sign of strength that we're starting our pullback. But this is the major high that needs to be broken. So as long as that's clear, then I think that's quite important. And then it's the same thing on the 15, which I'll jump down again. But as you can see, the chochs do, well, I don't know, it's kind of a mess here, but, we had, okay, the first one failed, but it's the same thing here again. This is where the external, internal can get a bit confusing. So we chocked here, a choch minor. So this is a high. Essentially, this is an internal high of 4-hour. We've identified our external, which is the most important to identify, this external, to see where we are, because this is like what fuels the market. But having an idea of, targets for internal trades, especially counter trend, what I mark out on my stuff. So we have a look, okay, this is a low. We closed above this level, so we've got a minor choch. Okay, this is that 4-hour demand that led there. Okay, potentially we get reactions out of this. We've got another 4-hour demand here, which then did give us a reaction, ideally to break this high to, if it's going to have strength within this minor choch to continue this internal structure, eventually to break this high. But that's where we have to have the significance of, okay, this would still be a minor choch as well. Okay, because this is just an intermittent structure, and this is the main low that, led to it. It is funny because this is like the internal low and the external low, but that just happens when you have bottoms put in, so this is the last down point of this leg and the last up point of this leg that's broken. So, this breaking this low is only significant to this internal structure having a pullback. But yeah, so then we have tagged into here and we haven't quite broken the high, but theoretically we should, in terms of, respecting this choch and you're respecting internal structure. We don't have to. We saw a choch fail just before. Our Choch failed and we collapsed. None of these demands held. So it could just be a failed Choch and we just collapsed through the lows. However, this is definitely whatever longs, whoever took longs from here, 100% valid trades, because we've got minor Choch. We can expect some sort of strength out of this area, ideally to break this high. You know, price doesn't have to do anything, but ideally break this high, and then we get into these areas of supply that are still valid to then, you know, short back down. So that's a 4 hour. Let me mark that up. 4 hour internal high. Hope that makes sense. So essentially we're still in this. Theoretically, you know, price could still come down to here and then maintain this internal. You know, as long as we don't break this low. If we break this low with a body break, then we have a new 4 hour breaker structure, and this becomes our actual, not internal high anymore, our actual 4 hour high, because we've completed what I define as enough for a retracement by taking liquidity from the market and being able to continue the move down. Yeah, but I'll leave it as it is because we don't know what's going to happen. So we can go on the 15 now. Okay, so let's have a look on the 15. Liquidity, I think for me to explain market structure has been like sort of a game changer, because it is literally what fuels the market, liquidity. You know, the market hunts it. That's where it's hunting. You know, that's and to be able to identify when the market has, you know, come and taken the liquidity to keep moving in the direction it wants, has been just like super eye-opening for me. So I really hope it helps you guys, because that's a big thing, like explaining the market when you have to teach it is it's been I think it's been very cool for me as well to be able to like try. I've spent hours and hours and hours and hours and hours looking at charts, trying to like want to be able to explain it as good as possible for you guys to understand. Obviously, like I said, not everything's completely explainable, but if we can explain, you know, 95% of it, then we can capitalize and make money out of it. So basically, yeah, we had 15 breaker structure here, and then essentially the same thing. We put in these little like intermittent, it's all sort of fractal, this one. We put in these little pullbacks here, which, you know, fully potential for, you know, continuation trades out of like certain things like this, if it, you know, with a single candle pullbacks and stuff, which might explain a bit better, like maybe in a different video. But just in terms of understanding external structure, I think it's important. And so like you put in these sort of lows, I mean highs when you're moving down, you know, that don't get swept, another pullback. It's just all sort of fractal. You see the same thing on the 4 hours that I showed you. And then finally we had like this push, and then we had a push up. This area was then, you know, then we had the push down. So this area was formed, and then we had the push up to take the liquidity from the market. So for me, this is the retracement. It's pulled some liquidity from the market, what it needed to keep moving down. You know, the retracements can vary in sizes, obviously, for whatever entity's pushing them and how much liquidity they want to keep moving the market down. And then we, you know, got our new breaker structure down here because we've swept the liquidity. And so then we had our new high here. We had like a tiny little failed run of the high. So nothing really exciting here. And then we had a wick break. For me, you know, like I say, I don't trade I don't trade wick breaks. So for me, this is the failed run of the lows. So like I said, my low moves down to here, and that's why this is labeled as my 15-minute breaker structure here, but it originates from this low. And this is my current high because it's the main high between the last breaker structure low and my new breaker structure down here, just to explain. And so then this was the high still. So that was why I was still looking for shorts out of these higher points of interest, because this was still my 15-minute high at this point, because I don't count this wick break as anything, just a failed run of the lows, so a continuation of the leg down. But however, we did have, some shift in, we started taking liquidity. We had, I don't know, wherever, hold on, had the break. Yeah, I guess you could say this is like the last push up. Then we had a break there. So it's like a flip zone. We had a break, which for me is like what we call a minor choch. So this is like, where it comes into all the time frames, and then we can look at the significance of it. So this was like a minor choch because we've taken some liquidity from, even in this move down, we had, highs left here, this high left here, high here, high here. Highs that led to new lows within the structure. And then finally, the price decided to break through some of these highs that kept getting held as we pushed down. And that's why the continuation trades work, because that's why you can trade them, because price tends to follow the market down and keep, doing these minor pullbacks and then kept pushing down until you're finally wrong. Okay, say we traded this one and we broke above our level, then we can realize, okay, we've started our 15-minute pullback. We won't, we can either look at like these areas in the discount zone, because we've now looking at, okay, we're starting our pullback. We don't know how far we're going to push. We know that our high probability is looking for nice order blocks in the discount zone after we've started our pullback. And then we can look at, like these areas that are significant up here that we had, sort of rejections from. But like I said, it's also valid technically. We've had our minor pullback, that we've got signs of strength, that, we could take longs out of this market. However, we understand that this can just be a 15-minute pullback, and there's no reason we can't reject from here. It was like I explained yesterday, I think, when someone asked how do we deal with, ranging markets, and when we have sort of ideas for both. You would just be a bit more conservative with your trades. Definitely go back and watch that. I'll try and find what time exactly it was, but it was essentially, we had a choch here. If you understand that we're in our 15-minute pullback, so we've got, a nice OB here that I think some people took. However, we've got this unmitigated demand that led to choch. Maybe we take our trades down to this target. Or maybe we front run it a little bit, be a bit more conservative, or we watch how price reacts here. If you really want to, do that, you could do that. But it's the same thing again. We then, had bullish order flow, but still internal of this 15-minute leg. So this can all just be part of the pullback on the 15. It's till we break this major choch, a major high, then that's when, I go, okay, now we're looking, for long opportunities. It just happened. So the 15 high was a 4-hour, choch level, but, so that was kind of what it's sort of like you said, lower time frame choch could be the start of the higher time frame pullback. So the major choch level on the 15 was actually the minor choch level on the 4-hour. See that it can all work together to, understand the market movement. So like, okay, what we've got now, we've chocked on our 15-minute time frame, and we've like our major choch on 15-minute time frame. So yeah, we're looking for longs on the 15-minute, and we've now got a minor choch on the 4-hour. We know we're in our 4-hour pullback, so let's look for longs on the 15-minute up until our 4-hour supply areas, and then we can look for shorts again. And that's, yeah, bringing the sort of the time frames together. So we then had ended up, the longs ended up winning this round. So, I think that's what also, confuses people, because they're like, oh, we're in a 15-minute downtrend. I took this, and that's why understanding, that the market, it's probabilities, understand what the market can do. And that it doesn't always, follow their plan. And, when there's potential for longs and shorts, being more conservative with your target, because, I think a lot of, beginner traders may, you know, if you're taking this trade and you're like, yep, we're a 15-minute downtrend, 4-hour downtrend, we have to, this is where I'm targeting. And then, you know, upset when it goes against them. And it's fair enough, because a lot of times, you know, it will just come down and take these lows out. But understanding that eventually market has to shift, and we can't predict, we can just know the best we can from, you know, the signs that the market's giving us. And if the market's giving us a 15-minute shock and, you know, a 15-minute internal breaker structure with, you know, nice demands and huge, big, fat green candles, or white candles in my case, maybe we want to be conservative with our targets just in case these lows do hold. And this is the point of, you know, a 4-hour pullback. Because like, as you can see, we said the 4-hour, if you understand now, which you do, or you will, the 4-hour is definitely due for a pullback, you know, with such, you know, a retracement, I mean, you know, with such huge moves down, you know, the market can't move like this forever. It needs to retrace. And so you can sort of, you know, we're in this daily demand, which that's obviously brings all together as well. We're in this daily demand as well, which then it sort of brings the idea of, okay, maybe we want to be a bit more cautious on our shorts. And potentially, you know, this may be a reversal point here. If we've got a super overextended 4-hour leg inside a daily demand, we're seeing the signs of bullish market structure inside the 15-minute, you know, sort of can put that together, which I think is the trickiest part, because it's quite a lot to think about, you know. And now we've started our 4-hour pullback. You know, maybe it's done. Maybe this is all we get. Maybe the price is that bearish that we're just going to be, you know, this is it, and we push down. We don't 100% know. But right now, there's nothing really high probability, is what I, you know, getting to this this point here, that we did our 15-minute high was broken. So we've got our major CHOCH level, and we've now got this 15 low and 15 high, but it's also our 4-hour internal high. So it's fine when they come together like this, because that's just how the market, you know, occurs. And it just happens because, you know, it's all the same market. But, you know, sometimes our main 15 structure is our own internal 4-hour structure. So maybe it's easier to understand just on the 15, or as understand on the 4-hour internal. But either way, it doesn't really matter if that happens. You're not wrong. It's just normally that is the case. You know, our internal structures are normally like the time frame lower. Oh, I think we got news. But essentially, you know, if our internal structure was going to play, this is the high to break. If the CHOCH is going to fail, then this is our lows. And yeah, and then we decide from there. So right now, we've had some reaction from our 4-hour point of interest that led to our minor CHOCH. It was also like a 15-minute point of interest down here as well. And we failed to run the highs, sort of like a sign of weakness. But yeah, and that's where we are now. For our demand, looking to break the highs. We failed the highs. We had this huge wick here. So, you know, everything from here is kind of unknown from now. So CHOCH fails, we break here. Maybe we sweep here and we get some sort of CHOCH up, and we eventually do keep pushing up. But yeah, right now we're sort of just, you know, we need this to hold and give us bullish CHOCH if we're going to continue this 15-minute structure going deeper into our 4-hour downtrend. So other than that, yeah, not too much else to, but yeah, if that all made sense, if you have any questions, let me know. But yeah, I think I'll end that one there, and we'll jump into the charts and see. Looks like market is bearish, you know. So like I said, actually, it's good lesson. The pullbacks vary in size, you know, they don't, and that's why it's hard to explain with, you know, fib channels or premium and discounts or that sort of stuff, and why I think it's nicer to explain it in terms of liquidity, in terms of the price, you know, collecting liquidity and keeping moving forward, because there's no defined amount the market needs to pull back, and the market can pull back as much as it needs, but I think the main defining factor is it needs to take some liquidity from somewhere to keep moving down. And that's where you get like, you can tell that these aren't new 4-hour structures for me, maybe 15-minute structures, but, we needed these, some of these highs, even just one of them that's happened here. We could, essentially this could be the pullback when we keep moving down. Then maybe our 4-hour leg is way smaller than this one, but for me, it's still valid because we've, taken some liquidity to fuel the market. But cool. I will leave it there. Thanks for joining, everyone. Appreciate it.